So let me work backwards. I think in 50 years from now, or less than 50 years, Bitcoin is worth 43 million.
Hello, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Today we have a longtime friend of Rich Dad, Mark Moss. And one of the best things about my job is I get to talk to smart people. And when it comes to crypto, as people laugh, guys my age have no idea what crypto means. And it's the, years and years ago, I was studying Dr. Buckminster Fuller, and he passed away in 86, I think. And he said there was a new kind of currency coming on the market. It was going to be called electronic money. So this was a long time ago. And the reason Bucky Fuller was a futurist, could predict it, he saw kids playing electronic board games. So he said, this is neat. And they didn't call it crypto, but he just mentioned it. And I went, okay. And so it appeared as Bitcoin and Dogecoin and all these other things, but there's been an explosion of it. So Mark Moss is one of the young guys I go to. He's one of my go-to guys. Another guy is Raoul Pal. For gold and silver, I go to other people. For real estate, I go to other people. But Mark Moss is my go-to guy when it comes to crypto. And we just went through the halving. And given that I'm the old guy, Mark, keep it simple. What does this all mean to you and the future of Bitcoin per se?
Yeah, I wanted to say something real quick. You mentioned Buckminster Fuller. I mean, he was an amazing futurist, and I love that. But Henry Ford, the father of the automobile and mass production, in 1921, he said that we should go into a new monetary system that was based on what he called energy money, where we'd literally use units of energy to create a money, and that's sort of what Bitcoin has. So Buckminster was great. Henry Ford 100 years ago called for this energy money as well. So we're finally seeing that come together. It's pretty amazing.
Yeah. Well, so what do you see with Bitcoin and the halving and all this stuff? And the other thing that's happening is the weaponization of the dollar. I mean,
Yeah.
we attack Russia with sanctions, and China. So everybody's pissed off at us. You have the BRICS, BRICS, coming after us, and the U.S. dollar's under attack. So
yeah. Let's talk about a couple of those things. So the one thing about Bitcoin is, so every 4 years, the new supply of Bitcoin gets cut in half. Now, for your audience, while the world of economics seems very complicated, and it can be, prices just are really the equilibrium of supply and demand. So we just look at the supply and we look at the demand, and the imbalance tells us where that price should go. And so assuming that the demand for Bitcoin stays the same and you cut the new supply in half, well, that should theoretically push the price up. And that's exactly what's happened. So
what else happened was that the ETF came up. So Wall Street got into the game.
Right. Yeah. So that increased the demand side. So
Correct.
we increased the demand side on a much larger scale, and now we're reducing the supply at the same time, which, of course, back to economics 101, should be pushing the price up. But just to kind of set everybody up so what they know what this halving is that with the Federal Reserve or any central bank for that matter, we have no idea what the supply of fiat currency will be at any given time. Right? They just change it whenever they want. But what Bitcoin did is Bitcoin came out with a predictable supply issuance. So we know that there will never be more than 21 million, and that will be in 2140 or 116 years from now. But through that process, every 4 years, the supply of new Bitcoin coming out gets cut in half. So we were just seeing about a week ago about 6.25 Bitcoin per block every 10 minutes, or let's just call it 900 per day. 900 per day were being released. That was the new inflation amount. And that just got reduced to 450 a day. And so this is the fourth time that's happened. And officially now, Robert, you might like this. Officially now, Bitcoin is the hardest money in the world. Gold has about an inflation rate of about 1.5% on a stock to flow. That's the existing supply of gold, and then the new flow. So an inflation rate of about 1.5%. Bitcoin is now verifiably more scarce than gold. So that's pretty cool.
So for the old guys like me, what does that mean? I mean, do you just jump in? I mean, there's also Dogecoins, there's Solana, there's Ethereum. I
Yeah.
mean, all these guys are printing. Everybody's in the game. If your
Let's talk about
generation
that.
is just printing is more and more of it. So
So
why would I jump in if
well,
everybody's making their own? I can make my own Bitcoin. I mean, a friend of mine called me and said, "Why don't you start the Rich Dad coin?" I said, "Because
yeah.
I stay in my lane. I don't go into other people's business." Well, what's
Well,
that from happening?
there's a couple of reasons why. I can tell you it's actually pretty simple. First of all, why should you jump in? Well, historically, supply and demand on the supply shock. So in the 2012 halving, the price of Bitcoin from the day the halving happened to the high point went up 9,300%. The second halving in 2016, it went from the day of halving to the high point was 2,900% increase in price. 2020, from the low point to the halving to the high point was 700% increase. And so historically, getting in around the halving has been very good for capital appreciation. Now, as to why it shouldn't be Rich Dad coin or Dogecoin or Ethereum coin or whatever, one of my favorite analysts, Lynn Alden, says that to conflate Bitcoin and crypto shows that you don't really understand either. So I can just give you a very simple explanation for this. To your point, you can create Rich Dad coin. I could also create a copy of Facebook called Mark's Book, or I can create a copy of Twitter called Mark's Twitter, but doesn't mean anybody will come use it. So that's number one. Network effects are real. And specifically around monetary networks, the network effects are even more real because what you store your wealth in really matters, right? When the whole world moved to the gold standard and China wanted to stay on the silver standard, they lost their position in the world because of that. So while choosing the right or wrong social network might not be as big of a deal, the monetary network is. So that's number one.
Wait. So for those who may not follow what Mark's saying, Mark's talking about Metcalfe's law. It's the power of a network. In other
Right.
words, a network is if I have a telephone, but I'm the only guy with a telephone, it's not worth anything. But if I have 10 million people in my telephone network, my network goes up. So that's Metcalfe's law. I understand
That's
that.
it. Yeah,
So
that's
everybody.
exact.
So what gives Bitcoin its power? It has its network already established, like McDonald's or Colonel Sanders. They have a network of franchises that gives us its power. So just explain that. That's what I'm explaining.
Yep, that's exactly right, Robert. So the bigger the network gets, the more powerful it gets, and the network effects are very powerful. And so it's very hard to create a copy of Facebook or Instagram and then try to outbeat them. It's sort of what we would call evolutionary biology. So like we've seen this happen all over the world, Robert. Like from where you're from, Hawaii, a new species get introduced that isn't native to that environment, and they can quickly grow to fill up that new environment. A rabbit or a snake or something like that. And then once that new species has been introduced and filled up that demand in that environment, a new species can't come take it. It's already been taken. And that's sort of like what Bitcoin has done. And I'm going to give you a very simple technological or technical explanation of this so everybody can kind of understand this, why Bitcoin and not all the other cryptocurrencies. The real revolution here is to go from a centralized system like the Fed or central bank or Facebook to a decentralized system. So instead of one database that the Fed controls or the bank controls, we have millions of databases. In order to stay really decentralized, where we have millions of databases, everybody has to be able to run one. So the Bitcoin database is about 400 gigabytes. It can fit on a thumb drive. A kid in Africa with a 7-year-old laptop can download the Bitcoin database and start running it. Anyone in the world can run a Bitcoin database, which keeps it decentralized. Bitcoin won that race. And so every other cryptocurrency, Solana, Ethereum, they're competing for something else. They're not competing for a decentralized currency. They can't be more decentralized. So they're competing for something else. The reason why is because their databases are so big. So, like Ethereum, for example, I can't run an Ethereum database. I can only run a portion of it, and only if I have a professional server in a professional co location facility like an Amazon cloud service. And so nobody or very few people can run that database, which makes it very centralized. So all of those aren't competing against Bitcoin. They're competing against something else, and we don't know what that is right now. But we know Bitcoin is competing not as a new technology, Robert. It's competing for value itself. Right. So if we use it to store our value, what other things do we use to store our value? Well, we use gold, we use real estate, we use bonds, we use offshore bank accounts. And so it's competing against those things.
Again, go back to my question. There's so many new coins coming out, and this friend of mine, he's a real goofball. He's always chasing this new thing, network marketing this, then it was this,
Yeah.
he's on to that. And so what would happen if I tried to start my own Rich Dad coin? Why would I
Yeah.
do that? I mean,
Well, you certainly could, and so people do. So there's 50,000 other coins that people have started up. But again, how you get people to go use that's number one. So that's very difficult. Like I create a Twitter account, and who's going to come follow my new Mark's Twitter app? So number one, how do you get people to do that? But number two, you can't get the decentralized nature. So Bitcoin was sort of created in this anomaly. We call it like this immaculate conception. It was created at a point in time 15 years ago when nobody knew what was going on. Nobody paid attention to it. And what happened is because of this decentralized nature, it allowed it to grow. These databases grew across the world, millions of databases and nodes. And by the time people figured out what was going on, the databases and the mining power was so big that you can't attack it anymore. It was like it was allowed to grow in the wild. And by the time people realized what it was too big to kill. But the problem is if you wanted to start something today that was as decentralized as Bitcoin, you'd have a problem. One, you would have to obviously tell people about it so they'd come and start using the network. But the problem is as soon as you tell people about it, they want to attack it. And what they want to do is they want to attack the network and steal coins off of it. And this has happened many times. Every time somebody's tried to do something similar to Bitcoin, the world attacks it, steals money from it, and then destroys it. And so it's sort of like this, what Peter Thiel called a 0 to 1 moment. We created the wheel. You don't create a better version of the wheel. A wheel's a wheel. And so it's theoretically impossible to duplicate what Bitcoin has done.
theoretically.
Theoretically.
Okay.
Yeah.
Well, that's a good explanation. So what do you recommend people do? Like for me, because I don't really understand. I'm a dinosaur when it comes to technology.
Yeah.
All I do is I buy whole coins.
Yep.
So I started buying whole Bitcoin at 3,000, got to 6,000, and I just chased it up to 70,000.
Yeah.
And I said, well, that's really stupid. I said, I know, but I have like 60 coins.
Yeah.
Now, it's not a lot. It's not like somebody bought it at 5 cents.
Right.
Does that make sense to you? So
Yeah. So
my investment thing is just get as many coins as I can and hang on for the ride. Because I'm not going to create my own coin. But what do you think about that strategy? It's like gold. I don't care what the price of gold is. I just want to know how many ounces you have.
right.
That's my philosophy.
And Robert, that's the perfect philosophy. And of course, I'm a student of yours, and so I kind of have repeated that, and I teach the same thing. And so, not that wealth is our highest purpose on this earth, but in the game of acquiring wealth, the goal is to get assets. And the goal is to continue to acquire those assets, not sell assets for fiat, but use fiat to get assets. And so what we do is we're saving. Instead of what I've done, Robert, is instead of thinking of as investing, I think of it as savings. I earn my money through my businesses, and then I put that money, I save it in real estate, and I save it in Bitcoin, and I save it in gold. And so the goal is to always allow it to grow up. And yes, I bought the $70,000 top. I'm going to buy the $1 million top. I'm going to buy the $2 million top, and I'm going to keep buying it all the way up.
Okay. Well, that's when we come back, we're going to go into the next question. I hear so many people, Bitcoin, buy it now. It'll be $1 million this year. It'll be $10 million in 5 years. And all that sucks in all the losers. Like the game of real estate. Everybody says real estate always goes up in price until it didn't.
Yeah.
And if something's going to stop, it will stop. So that's what I'm watching. I've seen these manias and these madness and people chasing things. So when we come back, I'm going to ask you, what do you think is possible for the price of Bitcoin in 1 year? But it's the price. And like I said earlier, I count the number of coins I have, not the price of the coin I have, because I want as many as I can get, because I'm optimistic. I'm a big fat bull on Bitcoin. I think the price will keep going up, but I've been wrong before. So we come back, we'll be talking to Mark Moss, a friend of Rich Dad for years, but he's my go-to guy, you and Raoul Pal, of how Bitcoin and how the game is played, because it's a very big game. We'll be right back.
Have you heard about the expanding influence of BRICS, Brazil, Russia, India, China, and South Africa? and its potential to severely impact the US dollar by possibly creating a new world currency. Even JP Morgan said, and I'm paraphrasing, the impact of BRICS would most likely be felt here in the US, where moving away from the dollar would cause our financial assets like our IRAs and 401ks to lose value. We agree with JP Morgan and many others. Now's the time to position yourself for stability, security, and wealth protection. So take it from Robert and me, whether you're a seasoned investor or just starting, we believe that gold should be a part of everyone's portfolio. Seize the opportunity to ensure your financial future with gold and do it with one of the best in the industry, Allegiance Gold. Allegiance Gold has done things right from the beginning, having earned 5 stars with TrustLink and an A+ with the Better Business Bureau. Allegiance Gold can help protect your IRA or 401k with physical gold and silver, or you can have it delivered securely to your doorstep. Get up to $5,000 in free silver on a qualifying investment when you visit protectwithrobert.com today. Or you can call 844-3-ROBERT. That's 844-3-ROBERT. Hi, everyone. I'm Kim Kiyosaki. Thank you for being with us today. As CEO and co-founder of the Rich Dad Company, I can assure you, Robert and I are both dedicated to our Rich Dad mission to elevate the financial well-being of humanity. And you are the humanity. We truly want you to succeed. When you succeed, we all succeed, and our mission grows stronger. With that in mind, I'm excited to extend a personal invitation to you to elevate your financial well-being by attending our exclusive free online wealth building event hosted by Robert. You'll learn what to focus on first to start increasing your cash flow immediately. You can reserve your seat right now by going to richdadonline.com. Just go to richdadonline.com. The event is 100% free and will help you achieve your financial goals.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, where we're broadcasting from Phoenix, Arizona, where it's either heaven or hell. And it's just about to turn to hell because it's getting so hot. But anyway, it's a great place to live. Our guest today is a friend of the Rich Dad Company. He's Mark Moss. We're talking about Bitcoin. It's old guy, young guy, old bull, young bull, as that old saying goes, if you're old enough to know that story. But we're talking about Bitcoin, where it can go, what's expected. So I'm going to have 2 questions for you on this segment. Number 1, today Bitcoin's about, let's say, $70,000, 60 or 70. What is your guesstimate? And as a guesstimate, and I'm not recommending anybody buy Bitcoin. This is an educational show only. What is your guesstimate for 2024?
Yeah, Robert. Obviously you're the master here. Trying to guess short-term price is always very difficult. I think the longer you look out, the easier it is to get probably a little bit more accurate. So the next 6 months is pretty unclear. The next 2 years seems a lot more clear. 5 years even more clear, et cetera. I would say that,
Mark, that was well said, because the way it was designed is only 21 million.
right?
So you said that supply, demand, or scarcity is increasing.
Right.
So that's why it's clearer the farther out it goes. Versus the US dollar, if we can print 10 million today, they'll print 20 million tomorrow, So that's the
Right.
problem with cash.
So let me work backwards. I think in 50 years from now, or less than 50 years, Bitcoin is worth 43 million
Per coin.
per coin.
And how do you compute that?
Yep, let's get to that. So the way that you would look at, say, a Silicon Valley investment, if I was pitching you on Uber, 15, 20 years ago in Silicon Valley, I'd say, hey, Robert, I have this way to call a ride from your phone. And you're like, oh, like a taxi? I'm like, yeah, like a taxi, but it's better. It's more convenient. It's Uber. You're like, okay, Mark, how much is it worth? I say 100 million. You're like, what? Where'd you get 100 million? Well, Robert, the taxi industry is this big. The limo industry is this big. The van share is this big. If I get 5 or 10% of those, I get to 100 million. So that's sort of the way that you look at the markets is disrupting. So Bitcoin is going to be a lot of things more than what we know, but what we do know today, it's competing as a store of value.
Correct.
So it's competing against value itself. So what are the store of value assets? Gold. We have about 14 trillion. Goldman Sachs, JP Morgan, they've put out guidance that it will overtake gold at some point. So that's about 14 trillion. We know that also rich people store their wealth in cars, fine art,
Stocks.
collectibles, things like that. And that's about 25 trillion right there. We know that people store their wealth, not in dollars, but in the stock market, 120 trillion there. We know that people store their wealth, their value in real estate. There's about 350 trillion there. We know that people store their wealth in bonds. There's 300 trillion there. We know people store their wealth, some of them in fiat, about 120 trillion there. And we know people store them in offshore bank accounts. There's about 30 to 40 trillion there. If we add that up, we get to about $900 trillion.
Right. And
Now, if we,
if I could, one of the things that I've had to adjust to is thinking in dollars versus Bitcoin. I mean, that took
right,
a long time because they just print more dollars. I mean, isn't that
that's
true?
right.
I mean, where our debt to GDP ratio now is 135, they're printing $1 trillion every 90 days.
It's insane.
And it's nuts. So, I mean, how do you measure dollars and cents and all this stuff?
Yeah.
That's why I'm in Bitcoin, because it's
Yeah.
21 million. That's it.
And to really put this home, Robert, for your listeners, if I were to buy a stock, let's say I invested into your business and I bought, let's call it whatever, 10%, I own 10% of your company. As you continue to raise money, a lot of times I get diluted.
Right.
So I don't own 10% anymore. I own 5%, 1%. If you think about it, right, nobody wants money. We want the wealth, the goods and services. And so really it's all the money in the world divided by all the goods and services of the world. But if I own, let's say, 1% of the US dollar ledger, I own 1% of the dollars in circulation, I own 1% of the wealth. But as they print more dollars, I get diluted. I own less and less as the ledger. But Bitcoin changes that because let's say that I could own 1% of the Bitcoin ledger. Then the Bitcoin divided by the assets in the world, I never get diluted. As the assets of the world grow, I continue to always own 1%. So it's pretty revolutionary that way.
Right.
But what
And,
but back to
and
this,
what I say is, as Bitcoin goes up in purchasing power, as the dollar comes down, that's how I see the whole thing. I'm going, it's like, yeah, I've in Rich Dad Poor Dad said savers were losers. What
yeah,
Sailor says, what do you call somebody who saves fiat or US dollars? He says, poor.
poor.
Poorest people are saving fiat. They
Yeah.
don't understand Bitcoin or crypto yet.
So I think what I think is it's $900 trillion. I think that Bitcoin can easily capture 10% of that market in the next 5 or 6 years. That brings it to about a $200 trillion valuation. That would be $10 million per Bitcoin. But what happens is money is evolutionary. So it starts as like, oh, look at this cool rock or feather. It's a collectible. As it could eventually evolve to become a store of value, fine art, cars, etc. If it has the right money attributes, portable, divisible, durable, etc., it could go to a medium of exchange. And then the final stage would be a unit of account. And I believe that in less than 50 years, Bitcoin will be what we call the unit of account. Instead of measuring things in dollars that are changing all the time, or euros or yen or yuan, I think Bitcoin will become the unit of account. So then we take the 900 trillion divided by the 21 million, gives us $43 million per Bitcoin.
That's a big call. It's a bold call. So this is the final. We could go on for hours, hours, hours. I'm on my YouTube listening to all guys like you, everybody calling
Yeah.
predictions. But a Satoshi, okay, you have a Bitcoin and you have a Satoshi. This is my
Yep.
real question. When I talk to people about getting your money out of cash, I say silver today is about 30 bucks, let's say, an ounce. And I think almost everybody in the world, if you're over 20, can afford 30 bucks.
Right.
But when you say Bitcoin's, let's say 70,000, that takes it out of league. But how many Satoshis per Bitcoin? And am I correct in saying this? I think just
Yes.
like everybody can afford an ounce of silver, everybody can afford a Satoshi. Or am I off base there?
No, you're exactly right. So the easy way to think of this is a dollar, one US dollar is divided by 100 cents.
Right.
A dollar, 100 cents. A penny is the smallest unit of account that we have in the US dollar system. The Bitcoin is divided by 100 million sats. So instead of cents, they're
100
sats, or
million.
100 million.
Wow.
So right now, one sat, which is short for Satoshi, is worth a fraction of a penny. When Bitcoin gets to $1 million per Bitcoin, one sat will be worth one US penny.
Wow.
And so right now, yes, you can buy a penny worth of Bitcoin. You can buy 10 cents worth of Bitcoin. Just like you don't have to buy a 400-ounce bar of gold. You can buy an ounce of gold. You can buy a gram of gold. You can buy a fraction of a gram of gold. And so you can buy 5 cents or 10 cents or $10 worth of Bitcoin, which is actually really revolutionary, Robert, because for the first time in history, no matter where you live in the world, you have the ability to buy property. You can buy actual property for $2 or $5, which is pretty revolutionary. So at $1 million per Bitcoin, it will be 1 penny per Satoshi, and that'll be the smallest unit of account. Now, that would put Bitcoin at $21 trillion, which is about double what gold is today. And at that rate, there would be enough Bitcoin in the world for everybody.
It's just
Right.
mind blowing. It's just mind blowing. So I don't make recommendations, as you know, because it's dangerous, and we're just an information company. But when I talk to people, I say, "Well, I can't afford $70,000." So am I accurate, Mark, by saying you can afford one Satoshi?
That's right. You can add. It's a fraction of a penny. So yes, you can buy a penny worth or $10 worth. Yes, you're 100% right. I'd love to just break one other thing down for you, Robert. I have a new little ebook that I'm put together, and I want to send it over to you to review it. I haven't got a chance to send it to you yet, but it's basically your teachings that I've taken and applied to Bitcoin.
Good.
And so you kind of called me out a couple times from stage. Oh, Mark trying to move to Puerto Rico doesn't know that rich people don't pay taxes. And so, Robert, I've taken your teaching and figured out a way to apply it to
Oh,
Bitcoin,
good.
right? Because the way to grow your wealth is to buy assets, accumulate assets, and never sell them, and then use debt against those assets. And so I've come up with a way that I put a calculator together. It's a little Google Sheet calculator to show people how they could retire off of Bitcoin tax free by leveraging debt against the asset. And I put a calculator together. You can put in how much Bitcoin you have. If you let it go for 5 years, you can see how much you can pull against it. And for example, in the numbers I put in the calculator, if you put $100,000 into Bitcoin today in 2024, and you waited 5 years, you could borrow about 10% per year and pull out $100,000 of tax-free cash flow every year, and you could live off that debt. At the end of like a 20-year run, you have about $2.5 million worth of debt because you've pulled that out to live off of it, but you're sitting on about $50 million worth of Bitcoin. And so this way, you don't have to sell the Bitcoin. The problem is obviously, as you know, but just for your listeners, if I sell the Bitcoin, I have to pay the tax, could be as much as 50%.
Right.
And then I have no more Bitcoin for the capital appreciation.
Right.
If I keep the Bitcoin, leverage it with debt, not only one is that tax-free income, so I don't pay the tax, which we don't want to be paying taxes right now, specifically with the wars. But more importantly, I keep the Bitcoin for the capital appreciation that's going to happen. I have a calculator put together. I'd love to give it to your listeners if they
Sure.
want.
So how do we do that?
Yeah, you can just go to go.onemarkmoss.com, go.onemarkmoss.com / retire dash Bitcoin. I'll give it to you guys. You can put it in the show notes.
Okay.
Go.onemarkmoss.com / retire dash Bitcoin. And it's a whole guide that shows you how to leverage it. There's a calculator, everything. But Robert, I want to send it to you as well. But I think this is the way to do it. We use fiat to acquire assets. Then we leverage those assets with debt, so we don't pay the taxes on them. And especially when this asset is potentially on its way to 43 million, like I think it can be in less than 50 years.
That's per coin.
Per coin.
That's your estimate. And by the way, I say it again, we don't make recommendations. We're an education company. We want you to think about what we're saying here because it just makes no sense to save dollars. I mean, in Rich Dad Poor Dad, 27 years old now, said savers were losers. I'll repeat Michael Saylor's thing because he's what, Micro Strategies or something.
Yeah.
He's one of the biggest holders of Bitcoin. He says, what do you call somebody who saves fiat dollars or fake dollars? Poor. And unfortunately, Mark, that's what's happening, as you know. The poorest people are working hard for dollars and they're saving dollars. They're screwed. They're screwed.
Yeah.
And every 90 days or 100 days, they're printing $1 trillion in fake dollars. We're bankrupt. And they're still saving dollars or yen or peso or euro. It makes no sense to me. You know, any final words to those characters who are still trying to pay fake money?
Yeah, I know we need to wrap this up. So some final words. You mentioned sanctioning Russia. So just this week, or just a couple days ago, we saw that they decided to go ahead and steal Russia's money and give it to Ukraine. And what that really signifies is a breakdown of rule of
Yeah.
law, right? And when the rule of law is broken down, then there's no fair game. Nobody can trust the system, and so the whole world is looking for an alternative that can't have their money stolen from them. The IMF, International Monetary Fund, just put out a paper a couple of days ago, and in this paper, it was called a primer on Bitcoin cross-border flows. And basically, what they saw, per the IMF, is that people in these countries that can't trust their money are moving towards Bitcoin at a very rapid rate. And so, as the U.S., which is supposed to be the beacon of law for the world, when the rule of law is broken down, when bank accounts are being seized, people are going to need to find a neutral reserve asset, and Bitcoin is the only neutral reserve asset that we have that can be used in the information age today.
Well, think about this. We'll talk about the rule of law. I mean, our President Trump, he's being indicted. I mean, he can't even go see his son's graduation, and they're
Yeah.
using the rule of law against a rich man. And that's this. I won't mention names, but what has happened to our country where they use our court system, but they can't find Hunter. The FBI cannot find Hunter Biden's laptop. Oh my God. I mean, I just, Mark, this is more than international. This is right in our backyard. And then Biden
Yeah.
opens up the floodgates to south took down Trump's wall. People are pouring across.
Yeah.
Fentanyl is now pouring across the border. Homelessness goes up, and they attack Trump. When you look at that, we don't have to look at Russia or China. We have problems in our own country here. And
Yeah. And it's up to the entrepreneurs, it's up to the capitalists to change the system, right? We're the ones that create the solutions to the problems. We're the ones that drive the world, not the socialists, not the politicians. They're the leeches that leech off of the productive people. So it's up to you and I. We need to take care of ourselves. We need to save our money, build our capital. We need to continue to innovate. We need to continue to build, and we will change the world.
right. And that's why we teach, because
Yep.
our educational system has gone Marxist. It's just sad what's happened. So anyway, thank you, my friend. Keep teaching, keep putting the work out there. And then one more thing is what we say here is just speculation right now. We don't give advice. You want advice, talk to a financial planner, and they'll tell you to buy S&P 500s. Anyway,
Yeah.
there's lots of free advice out there. Mark, thank you very much.
Thanks, Robert. Always a pleasure seeing you.
And thank you. We'll be right back for the final word. Thank you. Welcome back. I want to thank Mark Moss again. He's the guy I go to. He and Raoul Pell, the people I go to when I want to understand, Bitcoin or crypto, whatever it is. And I also got guys like Jim Rickards for gold and silver. And I have other people for different experts in their fields. The most important thing is we only educate. We don't make recommendations on what you should buy. But the point here that Mark is making is that I was at Macy's the other night, and I showed this woman my little Coinbase account. It started with nothing a number of years ago, and now it's got like about $2.8 million in it. And it just keeps going up. And she goes, oh my God, what if I lost money? I can't do that. I said, ma'am, you've already lost money. Because the way it works is the US dollar is coming down because they print more and more of it. And things like Bitcoin goes up in value. So those who are saving money, exactly as Michael Saylor says, those who save dollars, what do you call them? Poor. And there's millions and millions of poor people today because they're still hanging on to their fake or fiat currency. Again, we don't make recommendations and all this. You can go to Coinbase, there's lots of other exchanges. We don't make recommendations. But you can buy one sat or whatever it is, buy $500 worth, you're in the game. I would suggest just get in the game. Don't put any more than you can't afford to lose or you can't sleep. But you've got to get in the game because they're printing $1 trillion every 90 days. That means the purchasing power of the dollar is coming down while Bitcoin and those cryptos are going up. So don't be a loser. Don't be what Michael Saylor says, a poor person. and the world is full of poor people right now who are saving fake money like the peso, the yen, the euro, dollars. And then they're still hanging on to old ideas. So I thank, again, Mark Moss. I thank you all for listening to Rich Dad. And please open your mind up. Don't take my word for it. Please do your own research. Thank you very much.
This podcast is a presentation of Rich Dad Media Network.